Good afternoon, everyone. A very warm welcome. On behalf of Ethical Standard Board, I would like to welcome all the participants and the dignitaries of today's webinar on ethical issues while providing tax services, what holds for the future. I would like to invite CA Mukul Sharma, Chairman Mathura Branch, for take the proceeding further.
First of all, I am thankful to the Ethical Standard Board of ICAI for giving this opportunity to Mathura Branch for hosting this webinar on ethical standard issues while providing tax services, what holds for the future. I welcome our brother C. Anuj Goyalji, Chairman of Ethical Standard Board. I welcome CA Mangesh Pandurang Kinare, Vice Chairman Ethical Boards Board. And I welcome today's eminent speaker, CA Sanjeev Chaudhary, and also welcome all the members who are attending this webinar. Thank you for giving this opportunity. The aim of this program is to discuss the ethical issues while providing tax services to our clients, what holds for the future, what are the futuristic developments in the taxation services vis-a-vis chartered accountants. The existing provisions as per volume 1 of the Code of Ethics state that a professional can provide tax services to the audit clients and which creates no threats to professional independence. This program will discuss the future trends in the tax regulation with a focus on predicting changes that might present new ethical change, that might present new ethical challenges to ethics. This program will also address how to strike a balance between serving client interest and maintaining ethical obligations, to capture strategies to build a bridge to minimize the distance between aggressive tax planning and ethical practices. So today we are with us CA Sanjeev Chaudhary as our eminent speaker, and I'm just giving a profile of him in few words. CA Sanjeev Chaudhary holds a Bachelor of Commerce honors from University of Delhi and CP Australia. He is registered insolvency professional and a law graduate and has a vast experience of 37 years as a chartered accountant. He was a Central Council member from February 2013 to February 2019 and has served on various committees, including the Expert Advisory Committee, Research Committee, Accounting Standard Board, Audit and Assurance Standards Board, and International Taxes Committees. He also chaired the ICAI Ethical Standards Board for year 2018-19 and is presently a special invitee to the board. He was a member of ISPA from 2019 to 2023. He has a versatile personality and is an active speaker, a self-motivated, enthusiastic, and hard-working person who has proved to be a great source of motivation, specifically for the youth and for us all. Thank you. So now I hand over the mic to CA Ravi Agarwal for further proceedings. Ravi, continue.
सबसे पहले तो मथुरा ब्रांच के लिए बहुत ही सौभाग्य का दिन है कि एथिकल स्टैंडर्ड बोर्ड के द्वारा एक वेबिनार हमारे लिए ब्रांच के लिए आयोजित की जा रही है, जिसमें सबसे पहले मैं बात करूंगा अपने सीसीएम और हमारे एथिकल स्टैंडर्ड बोर्ड के चेयरमैन सीए अनिल गोयल जी का, जिनका मार्गदर्शन हमें ब्रांच को समय समय पर प्राप्त होता रहता है। और उसी संदर्भ में हमारे एथिकल स्टैंडर्ड बोर्ड के वाइस चेयरमैन सीए मंगेश पांडुरंग जी का भी मैं स्वागत करूंगा, और हमारे आज के वेबिनार के केंद्र बिंदु सीए संजीव चौधरी जी, उनका भी मैं अपनी ब्रांच की तरफ से सभी मेंबर्स की तरफ से स्वागत करता हूं। और आगे की वेबिनार के लिए सर से आग्रह करूंगा कि वह आगे की वेबिनार स्टार्ट कर रहे हैं, जिससे कि हमारा मार्गदर्शन हमें प्राप्त हो।
Yeah, thank you, Ravi ji. I'm really very happy that we are having the presence of CA Sanjeev Chaudhary sir, who has headed this Ethical Standard Board also as Central Council member of the Institute of Chartered Accountants of India, and internationally also he has contributed as the part of the International Ethical Standard Board. So I welcome on behalf of the Institute of Chartered Accountants of India and as the chairman of the Ethical Standard Board, I welcome C. Sanjeev Chaudhary sir And of course, we are having the presence of a very prominent event enablers from the Krishan Nagari, Mathura, CA Mukul Sharma ji, our Honorable Chairman of Mathura branch. We are having Rohit Kapoor sir, immediate past chairman of Mathura branch. We are having the presence of Nitin Vasne ji, our young and dynamic leader of the profession from Mathura, from Hathras. And of course, we are having the presence of CA Ravi Agarwal ji, our honorable leader of the profession from Mathura branch. Of course, we are having our honorable secretary of Ethical Standard Board, Ashish Sabru Bhatnagar sir, who is a very prominent personality of the Ethical Standard Board since last more than 10 years. He is contributing as secretary of the Ethical Standard Board, and of course, CA Rasmi Soria ma'am, a senior chartered accountant, contributing in a great way in Ethical Standard Board, and all the viewers present here from each and every part of the country, outside country also. I think thousands of participants are with us. Very good afternoon. We are having very important topic, ethical issues while providing tax services, what holds for the future. So I think we are having the best of the person who is the master as far as the taxation is concerned, and who is the champion of the ethical issues. I think the way Sanjeev sir has contributed as Central Council member also in a very ethical manner. I think something really great, and I am really fortunate that I got the opportunity to be the part of the council when Sanjeev Chaudhary sir was the part of the council. And today's topic focuses on the ethical considerations in providing tax services to clients with special reference to futuristic expectations. In normal course, Sanjeev sir, we do think that while performing attest functions, only the matter of the ethical issues do arise, and while providing consultancy services as tax consultant or GST consultant, the ethical issues are not at all there, which is not true. So I think you are the best person to let us know, let us our members know that what are the ethical issues which are supposed to be taken care of while providing tax services to clients, and with a special reference to futuristic expectations, what we are supposed to do. And friends, we are very well aware that ethics is the cornerstone of our profession, shaping the character and conduct of individuals in the field. And as a professional, stress through the code of ethics, maintaining transparency is the utmost importance. So I'm quite confident after the deliberation of Sanjeev Chaudhary sir, we will be certainly taking care of the ethical issues while providing tax services. And we are very well aware that chartered accountants have enormous responsibility of protecting the interest of the clients and safeguarding their information. Ethical Standard Board functions as a standard setting body and code of ethics as a guiding principle. And we are revising code of ethics also with the help and support of Sanjeev Chaudhary sir. And you will be very happy to know that we are practically more or less at par with the International Code of Ethics. And the Code of Ethics is segregated into 3 volumes, Volume 1, 2 and 3, while 12th edition of ICAI Code of Ethics was made applicable from 1st July 20. Certain provisions were deferred due to COVID-19, responding to non-compliance of laws and regulations, NOCLAR, sections 260 and 360, fees, relative size, paragraph 410.3 to 410.6, and tax services to audit clients, which is the thing which we are supposed to discuss today. And Volume 1 of Code of Ethics under Section 600 talks about provisions of non-assurance services to an audit client, and subsection 604 mentions about the type of services which are allowed, as there are no threat to the professional independence. So subsection 604 tax services mentions of following services such as tax return preparation, tax calculation for the purpose of preparing accounting entries, tax planning and other tax advisory services, tax services involving valuations, assistance in the resolution of tax disputes, issues such as tax evasion, tax avoidance, needs to be addressed, streamlining with ethics, which means what one should do even if nobody is watching or regulating. These needs to be discussed, keeping in mind the interplay between tax ethics and globalization. And friends, Code of Ethics ensures that standards of integrity and professionalism is being maintained to assure trust and credibility in the financial world. And Ethical Standard Board objective is to set up ethical standards for chartered accountants, converge with the international best practices on ethics subject to local laws, thereby enhancing the quality and consistency of services provided by chartered accountants and strengthening the public confidence in the profession. I will not be taking your further time as we are very, very eager to hear Sanjeev Chaudhary ji. But one thing, Sanjeev sir, we have already discussed that how we can make the life of the chartered accountants, but particularly the practicing chartered accountants, simpler. And those requirements, those restrictions, which are in the present days circumstances, is not required, is not desired. How we can come out of that and how we can allow the practicing chartered accountants. That is our mindset. And in addition to that, Sanjeev sir, we have come out with a very, very important step which we have taken. That how we can act as a bridge between practicing chartered accountants in particular and the end users. And we have come out with the CA Connect portal, in which we will be listing each and every practicing chartered accountant. And if one do want a chartered accountant who is having the expertise in international taxation in India, so only one name will be there, Sanjeev Chaudhary ji. Like that, we will be ensuring that if somebody wants the chartered accountants who are experts, or they want the professionals who are expert in GST in Mathura, so only and only chartered accountants' name will be reflected, and of course those chartered accountants who have given their names in the CA Connect portal. And now we have decided that on the push basis, we will be including each and every chartered accountant's name in CA Connect portal through SSP, and we will be sending the communication through email and SMS that if they want to unsubscribe, they can come out of that. And if they want to edit their profile, they can very well edit their profile, their expertise, and can be put there now. So it would be a game changer for the practicing chartered accountant, because the number of services which we are providing are those services which are non-exclusive. And non-exclusive services can be provided by the advocates, by the company secretaries, by the cost accountants, by the MBAs, by other professionals also, Sanjeev sir. So when we will be trying to see that the chartered accountants who are having the expertise in the respective fields, which is not an exclusive field for the chartered accountants, how we can try to see that the visibility of the chartered accountants can be enhanced, so that more and more work can come to the members of the Institute of Chartered Accountants of India, which may not be coming in normal course and may be going to other professionals. I will not be taking your further time. I once again welcome Sanjeev Chaudhary sir. I once again welcome our honorable event enablers. We are having the presence of CM Mukul Sharma ji, our honorable chairman of Mathura branch. We are having immediate past chairman, my elder brother CA Rohit Kapoor ji from Mathura, and of course we are having Ravi Agarwal ji, our honorable leader of the profession from Mathura, and Nitin Vasne ji from Hathras, and the leader of the profession from Mathura, and all the respected members from each and every part of the world. Thank you very much. And over to, I will request Sanjeev Chaudhary sir for his deliberation, please. A very, very big round of applause for CA Sanjeev Chaudhary.
Thank you, sir. Thank you very much, Chairman, Ethical Standard Board, Mr. Anuj Goyal, for the warm welcome and a warm introduction. I think Mangesh Bhai must be somewhere around. Thank you very much, Mangesh Bhai, for this opportunity also. Mr. Mukul Sharma, I can see Mr. Rohit Kapoor, Mr. Ravi Agarwal, Mr. Nitin Vasne, the other office bearers of the Mathura branch as event enablers. Thank you very much for the invite. I think let me open my my response by two statements. One is on the code of ethics, where we are. So what I've done is I've divided my presentation into two parts. Before I go to what is the future on tax planning services and I explain where I'm coming from, let me first very briefly touch upon our Code of Ethics Volume 1 first. And I have a very small presentation, just about 8-10 slides. And actually, Ashish and Rashmi has helped me put together those slides. Very factual slides I have put. I will not go into many details of Volume 1, but what does the Volume 1 talks about the tax services. I'll just very briefly touch upon. So this is my presentation. I'll just second.
So it's not visible, sir. Just click on share screen.
I'm just trying to get that screen on. Can't get that screen. 1 second. Let me just.
So share screen button at your dashboard of Zoom.
I'm just trying to get that only. Yeah, here it is. This is share screen, and I'm not sharing it. And I think you should be see it in about 2 seconds.
Yes, it is visible, sir.
Right? Okay, there you are. So, okay. Is it fine, Rashmi, now?
Yes, sir, it's visible, sir.
Okay. So, first of all, I'm just touching upon what our Code of Ethics in India says about tax services. So, first of all, let's look at where do we get the rights to do a few things. If you look at Section 2, small 2 of our Act, there we get the right and responsibility to do the tax audit, because it says Section 2 mentions about audit, and audit obviously would include tax audit. Can we do the return filing? The administrative services, which defines, which gets its explanation from the guidelines of the management consultancy services, talks about return filing. Can we do tax advice and representation? Regulation 191, which is reproduced on the slide, very clearly says that subject to the control of the council, a CA in practice can act as a liquidator, trustee, executor, etc., and advisor or representative for costing, financial, or taxation matters. So I can be an advisor, I can be a representative for taxation matters. So this is what broadly our earlier code has spoken about on tax services. Now, if you look at the earlier code, 2009, Anuj mentioned about our present code, which was approved by the council in February 2019, and which became applicable from 1st July 2020. Before that, we had we have our code of 2009, which was based on the ISBA code of 2005. Let me just add one thing here, that ICAI is a member of IFAC, and ISBA as a board used to be a part of IFAC till about 3 or 4 years back. Our institute has a responsibility to look at what is happening internationally, look at the auditing standards, the assurance standards, the ethical standards, and bring them to India, subject to the council approving those as to what is required in India. So when I look at our earlier code of 2009, it was basis the ISBA code of 2005. And then in 2019, February 2019, we revised our code, which now becomes the code of our code 2019. It actually refers to taxation services only with reference to audit clients. Because all of us, would agree that if you're providing services, tax services to a non-audit client, there are no restrictions. I think the restrictions more come in when you start doing the test function, the audit function. And what does Part A of our earlier code says? That the firms will be asked to provide taxation service to a financial statement audit client. The earlier position was taxation services comprise a broad range of services, including compliance, planning, provisions of formal taxation opinions, and assistance in resolution of tax disputes. Such assignments are generally not seen to create threats to independence. Now, this was one statement which was there in the 2009 code. In a way, practically it said you can provide practically all taxation services, be it compliance, planning, opinions, resolution of tax disputes, etc., etc. And it said such assignments are generally not seen to create threats to independence. I can read the statement in two ways. The statement says such assignments are generally not seen to create threats to independence. But if it does, then the statement strictly may not apply. Is that the reading? But that was the 2009 code. Now let's go forward. We have a 2019 code now, which is the 12th edition, which was approved, as Anuj also said, in February 2019, applicable from July 20. And why this time was given actually from February 19 to not 1 month or 2 months, but a year plus, so that all the members become aware of the changes to the code, because there were many changes to the code, the way it was drafted, the way it was written, etc., etc. Anuj also spoke about 3 volumes. Volume 1 is a principle-based code, which is based on the ISBA code, but having said that, it was converged to what is required in India. To give you a couple of examples, internationally in the ISBA code, there is no rotation of auditors. But our Companies Act requires rotation of auditors. So we brought those provisions in our code. Now, internationally, there is a rotation of partners, 7-year duration. That is again in our code. So we actually made sure that our code looks at what is required in India, what is done internationally, and then ultimately it is approved by the council to say what should be the code of ethics in India. Again, I think Anuji made this position in the opening remarks that these 3 provisions, that responding to NOCLAR, fees, and tax services to audit clients, these were deferred and they have become applicable from 1st October 2022, with some changes again, which we will not go into today, which were announced by the council in September 2022. Now, very quickly, what does the code say about tax return preparation? The para numbers are written on the slide. It says usually there is no threat because you're using historical information. You see, the accounts have been audited, you're preparing the tax return. It says it principally involves analysis and presentation of historical information, keeping the existing tax laws in mind. And further, the tax returns are subject to the scrutiny by the tax authorities. So the general comment in the new code is that the tax return preparation is, in a way, a permitted activity. Can you do tax calculation for the purposes of preparing accounting entries? The code says it creates a self-review threat for members. And therefore, it says you must have appropriate safeguards. Having said that, the code also goes on to say that an auditor shall not prepare tax calculations of current and deferred tax liabilities for an audit client that is a public interest entity. Now, let me make 2 statements here. One is people who have gone through the code in detail, maybe at different points of time. In the new code of 2019, certain paragraphs start with the letter R, which is, if you look at this slide also in the end, I have mentioned the paragraph number R604.6. R actually stands for a requirement, a mandatory requirement which a member has to follow. Okay, let me take one more step back. Someone had posed a question to me in one of the earlier webinars. How is it that the code of ethics apply to me? But there are two things which you need to keep in mind. And I'm not again going into the sections. This code, whether it was approved in 2009 or 19, or any amendments as approved by the council, they're all always approved as a guideline of the council. And our act and regulations provide that all members need to follow the act, the regulations, and the guidelines of the council as issued from time to time. Otherwise, it will lead to a professional misconduct. So you have to follow the code of ethics because this is issued as a guideline. Now, I recall someone probably in one of the cases had raised a challenge whether the council has the powers to issue guidelines also or not, because it was not earlier expressly provided in the act. I think it was in 2022, if I'm not wrong, the act was amended. And there is an amendment to the powers of the council where it has been clearly changed now to say that the institute's council has the powers to issue guidelines. So a power has been expressly stated so that nobody can challenge whether the council has the powers or not. So coming back to this slide, the last bullet on this slide, if you're an auditor of a public interest entity, you cannot prepare the tax calculation. However, you have the right to review it because ultimately those entries will go into the financials and you should look at and review those statements. You can't prepare it because if you prepare it, then your review will amount to a self-review, which is not permitted. Going forward, can you provide tax planning and other tax advisory services? The code says yes, but it might create a self-review and an advocacy threat and follow appropriate safeguards. Again, there's a requirement in para 604.8. And what does it say? It says that as an auditor, you will not provide tax planning and other tax advisory services to an audit client. I've highlighted the word audit client here. It is not a public interest entity. It can be an audit client, which can be a private company also. It can be any audit client. It says you will not provide tax planning and other tax advisory services when the effectiveness of the tax advice depends on accounting treatment or a presentation in the financial statements where two things: a reasonable doubt about the appropriateness of the accounting treatment under the relevant financial reporting framework. So the auditor is not sure about it. He has a reasonable doubt. And the outcome will have a material effect on the financial statements on which the audit team members will express an opinion. If both A and B are there, then an auditor shall not provide tax planning and other tax advisory services to an audit client. So please look at these provisions. There's a big change into what it used to be and what it is now. Can you provide valuation services? Certainly, yes. But if the valuation becomes a part of what you're going to be commenting on as an auditor, then refer to para 603, and there are again certain restrictions and you have to take appropriate safeguards. Can you provide assistance in resolution of tax disputes? The code says it might create a self-review or advocacy threat. Use the appropriate safeguards. But can you appear as an advocate for an audit client before a court, or where the amounts involved are material? The code says you shall not provide such services before a court. And court has now been clarified, I think about a couple of years back in 2020 or 22 rather, that you can appear before a tribunal, and court does not include a tribunal. So the council has clarified that. But having said that, the code very clearly says that you shall not provide if you become an advocate. So you can't become an advocate and provide the services, or the amounts involved are material to the financial statements on which you will express an opinion. So there are certain restrictions which have come in. And these restrictions have come over a period of time. And I'll explain, Anuj had mentioned in the beginning, how do we come out of some of them? You see, the international code has gone under a big change. And I think what I've seen in the last 5 years, and I'll talk about some of them as I go along, we have a responsibility in India to look at those changes. It is for the council to ultimately decide what changes will they bring into India and what changes or where they need to do the modifications, debate on them, approve them, and that is what will become applicable to India. The international code, as it is only recommendatory. It is only advisory. It is not mandatory. Each country has to follow and look at its own guidelines, what is required and what is not required. So the changes will then accordingly can take place. And this is the last slide I'll touch upon, responsibility of a chartered accountant in relation to unlawful acts by their clients, in relation to NOCLAR. NOCLAR actually stands for non-compliance to other laws and regulations. So NO is non, C is compliance to other laws and regulations is what NOCLAR is very briefly said. These provisions actually became applicable from 1st October 2022 in India. In summary, one point which comes out of these provisions is that the employees of the listed entities being senior professional accountants. So our code of ethics on NOCLAR right now applies only to the audit and only to the audit of listed entities. Internationally, it applies to all services by a CA. Listed, unlisted, doesn't make a difference. Audit, tax, it doesn't make a difference. In India right now, we have started from making the NOCLAR applicable to the listed entities with a net worth of 250 crores or more. And the provisions will equally apply to the senior professionals of those listed entities and the professional accountants who are in practice for those listed entities. So there is a section 260, which is for professional accountants in service. There is 360, which is professional accountants in public practice. So if they encounter any non-compliance of laws and regulations, then these provisions will come in force. Again, I'm not going into other details because the topic of discussion is something else. So as I said at the beginning, this presentation actually was, more prepared by Ashish and Rashmi in the office, and I thank them for their support. Now what I'll do is I'll go to my other presentation, which is on tax planning services, and I will this presentation actually has been held by some of my colleagues who have worked with me in the ISBA, International Ethics Standard Board. As Anuj mentioned, here today we will talk about on what the changes which have taken place in the ethical standards for tax planning services only and nothing else. And before I go to this, let me just spend a couple of minutes on what ISBA does, what is their mission statement, and just a few slides on what ISBA is doing. And then I'll straight away come to what the standards are on tax planning services. ISBA has actually now 17 board members. Earlier it used to be 18, now it is 17. And I think maybe in the next year or two, it will be 16 board members. Their mission statement is, and first of all, I must state that ISBA is an independent global standard setting board. It earlier used to be under IFAC. Now it is under a separate trust. It was independent even then. It continues to be independent, and it has a responsibility. And the mission statement is just one small paragraph, which is there on your screen on the left side. that ISMA's mission is to serve the public interest by setting ethics, including independent standards, as a cornerstone to ethical behavior in business and organizations, and to public trust. So there is a public interest and there is public trust. And to public trust in financial and non-financial information that is fundamental to the proper functioning and sustainability of organizations, financial markets, and economies worldwide. So two things come out from this. The Ethical Standard Board set ethics keeping public interest in mind. And your client is not only your client. Your client can be various stakeholders. It can be shareholders. It can be government. It can be users of financial statements. It can be banks. It can be anything. So don't look at when you are doing your function, the ethics will ensure or will push you towards ensuring that you are always working in public interest. There is public trust which people pose in us. And the other point I would like to make is, I think somewhere some people got a belief or some misunderstanding or I would say more misunderstanding that this code applies only to the attest function and only to an audit services. No. The code applies to all professional accountants. They use the word professional accountants. In India, we are called chartered accountants. But I think our code uses the word professional accountants in practice. Internationally, they use the word professional accountants in business. We use the word professional accountant in service. That's the only difference. Otherwise, a professional accountant in public practice or a PAPP is equivalent to a practicing CA here. And a PAIB, which is public accountant in business, is equivalent to an accountant or a CA in employment or in service. So that is how this code has been divided and is made applicable to both. So this is the mission statement. They set ethical standards for accountants world over. They don't look at what should be in US or what should be in UK or what should be in India and what should be in Sri Lanka. No. They set principle-based ethics standards, and then they leave each country to decide and accept them as it is, or make changes wherever they think they need to make. And the law says, this code very clearly says, if your laws are more strict, then those would apply. That is what the guidance is. This is just about the global adoption of the code. We had a 2009 code and there are later editions. And in 2018, very many changes were made to the code. And that is why there is a 2018 edition or the later editions. So each year there's an edition, but 2018 was one big change. The earlier code was accepted or adapted in 130 jurisdictions. As we speak, the new code, the revised code or the extent code, if I use the word, the 2018 code, is being adapted by 90 odd jurisdictions now. And you can go to the IFAC's global impact map to see which country it applies. And this code is translated into 40 odd languages. Now let's come to just the next two or three slides on building blocks of the code. We call it building blocks because these are the four blocks or 5 blocks, if I may say it. Part 1 of the code talks about complying with the code, the fundamental principles, and the conceptual framework. This is what part 1 talks about. It is applicable to all professional accountants. And let me add here, our code, the 2019 code, is basis this code. So practically whatever is stated here, subject to sub changes, will be in our code. So please remember that our code is practically, so what we did in 2018, when I chaired the Ethical Standards Board in India as a member of the council, we were given the responsibility to revise the code because our code was 2009 earlier. So the council then approved and asked the Ethical Standard Board to look at the 2018 code of ISBA, which is, I talked about, if you look at the bullet in between, 2018 code. So we were asked to look at this code, and this work was started somewhere in June, July, August. I'm forgetting exactly which month. And we had this code before us. We looked at that code, made changes to that code, which was then approved by the Ethical Standards Board, went to the council, approved, then it was exposed to the public, etc., etc. So the entire process of approving the code was followed. And our new code, which is the present code, is basis this 2018 code. Part 2 is applicable to PAPPs, which is Professional Accountants in Public Practice also. It is applicable to PAIBs, which is Professional Accountants in Business. This word is used in ISBA. In India, we use the word PAIB, Professional Accountants in Service. Part 3 is applicable to Professional Accountants in Public Practice. And Part 4A and 4B, which earlier used to be a separate booklet where only the international standards were contained, those have been brought into the code. 4A refers to the independent standards while you're doing audit and review engagements. And 4B is applicable when you are doing assurance engagement, which is other than the audit and review. There's a glossary which is in the end. And this code has undergone changes almost every year. And I'll explain some of those as we go along. In brown, if you see the 5 blocks, these are the 5 fundamental principles of the code: integrity, objectivity, confidentiality, professional competence and due care, and professional behavior. Now, these 5 fundamental principles have been in the earlier code also, are there in the present code also. So there's no change to the fundamental principles, whether we had the 2009 code or maybe the earlier codes also. So I remember having seen the 2009 code, same fundamental principles are there. There are expectations from us, because of our attest function. People expect more. And if you read the code, the first sentence in the code in para 100.1 says that a distinguishing mark of the accountancy profession is its acceptance of the responsibility to act in the public interest. So what I'm saying is that we have to act in public interest is not what Sanjeev Chaudhary is saying or what Anil Bhai might be saying or what Ashish or Rashmi might say. No, it is coming from the code. When anyone sees that the work has been done by an accountant, a chartered accountant, I think their confidence level goes up because there is an expectation that we would have done our work properly. Not only properly, even ethically also. So these are the 5 fundamental principles which are defined in the code. So if I look at definition of any one of them, and I do not want to go into each definition here at this point of time, because that's not my intent. So what is meant by integrity? Integrity says just 2 lines, not even 2 lines, 1 line. Integrity is to be straightforward and honest in all professional and business relationships. I mean, actually, if we take a step back again, do we require a code of ethics to be codified, to be written? I mean, ethics is what naturally comes to all of us, and it should come to all of us. But why it is codified is that tomorrow if there's a dispute, tomorrow if there's an issue, if someone raises an issue that, well, you did not do your work properly, what is the guiding principles? What does the guidance provided to the members by the ICAI? This is why the code has been written. Otherwise, all of us are supposed to do and work ethically. Integrity is the cornerstone. Should you not be objective? Yes. Should you not have competence and you do your work with due care? Yes. Should you not work and behave professionally? No doubt about it. Should you not keep your clients' issues confidential? Yes, until unless there are legal reasons to respond. So all these fundamental principles are there in the code. I mean, and I think we're supposed to follow them. And then there are independent standards. Because as an audit function, you need to be independent of your client. You can't be doing audit and be dependent on your client, because then your opinion will be biased, your views can be biased. And that is why the independence is a cornerstone. And what does the conceptual framework says? It basically, again, let me, touch upon just one thing here. If you look at para R 120.3, it again starts with the letter R. R means requirement. Requirement meaning the members have to follow it. It says the professional accountant shall apply the conceptual framework to identify, evaluate, and address threats to compliance with the fundamental principles set out in the earlier section, which I just now read, 110. R, requirement, you must do this. So what are your fundamental principles? 5, which are written in the slide here. Professional competence, integrity, objectivity, confidentiality, and professional behavior. What kind of threats you can see? You may have a self-interest threat, you may have a self-review threat, you may have advocacy threat, etc., etc. All those threats are again explained in this code. And how do you apply the conceptual framework? The next para, R125, says, you as a professional accountant shall have an inquiring mind. You must have an inquiring mind always. You should be always questioning, is it right for me to do this work? Are there any threats to my fundamental principles? And how do you resolve it? You must exercise professional judgment and use a reasonable and informed third-party test. Meaning thereby, what would be a reasonably informed third party do in such circumstances? Will they carry out the work? Will they stop the work? Will they change their course? Will they change their team? Will they do something else to address those threats? So I'm not going into the threats today. That's not the topic for discussion today. But the code says very clearly that you need to apply the conceptual framework. That means you need to identify, evaluate, and address threats. That's what will make sure that you're doing your work ethically. Now let's come to the topic for today: tax planning and related services. Ashish, I have time till what, 4:30, 4:40?
Pardon, sir?
Till what time you think I should be going on? 4:30, 4:40, what time? Because we are at 3:45 now.
Yeah, 4:30 will be okay, sir.
Okay, all right. So I'll do it accordingly then. Perfectly fine.
Yes.
Thank you very much, Ashish.
Yes, sir.
Now coming to tax planning and related services. Tax planning and related services was one of the identified areas under the strategy and work plan document of the ISBA board. Okay, so what is SWP, strategy and work plan? This board actually does a lot of work, and what they do is they actually decide what they will do in the next 4 years. So when I joined the board in 2019, the earlier board in 2018 had gone through a process of setting out what should be done in 2019 to 23. 19, 20, 21, 22, 23, 5 years rather. And in 23, which is the last year, we have now set the strategic and work plan for the next 4 years, 24 to 27. Having done that, there can be modifications to it if there are other things coming up, but otherwise this document is prepared by the board, taking feedback from the stakeholders, the board debating on it, and then approving it. So what should be the work plan? And one of the work plan idea was to look at what should be the changes, if any, to the code on tax planning and related services. I think a lot of us, as I said in the beginning, believed that the code doesn't apply to us. Apply to us meaning people who provide tax services. In the last 25, 30 years of my career, I have provided tax services only. So can I say the code doesn't apply to me? No, the code applies to all of us. But I think somewhere there was a perception in some people's mind that the code doesn't apply to tax professionals. So the first thing which was done in 2019 by the then chairman of ISBA was to set up a working group to look at should there be changes to the code on tax planning and related services. Let's not look at every service provided by a chartered accountant or a professional accountant. Let's look at tax planning. Because what had happened in the last 10, 15 years, which we saw was that there were so many tax scandals, so many tax problems. There were Pandora Papers, there was Panama Papers, there was some leaks, etc., etc. And I'm not going into those, but there were problems. And somewhere it was felt that is it that the professional accountants are providing services which are aggressive tax planning services or tax avoidance schemes, which should not be, because there's a very thin difference or thin line between tax planning and tax avoidance. To cut the long story short, this work was entrusted to a working group. I was in this board for a period of 5 years from 19 to 23. So when I joined the board in 19, it was towards the end of 19 that this working group was set up. And as you would recall, all of us, you would recall that in April 20, we had COVID, March 20, April 20. The working group was given 2 years' time to meet stakeholders. So we went all around the globe doing webinars, having calls with Accountancy Europe, IBFD, OECD, institutes. We met people, should there be changes or not? And we kept the board informed. And there we submitted a report to the board in December 21 that there are changes required because everyone wants those changes. Post that, in January 22 or December 21, a task force was constituted to suggest changes to the code. Those changes were approved by the board in December 22. Then they were exposed to the public, stakeholders, everyone, in February 23 for a period of 90 days, 90 days, 3 months approximately. Those changes, comments, and I think Institute was one of them, one of the 49 people who responded by written comments. Those written comments came, objections, changes, why not this, why this, etc., etc. And all those letters of everyone is on the website of ISBA board. If anybody wants to go and see, you can go and see. The task force looked at each of the comments, dealt with each of the comments, made changes wherever required. And again, the board in December 23 approved those changes as a final changes to the code. Then these changes go to the PIOB, Public Interest Oversight Board. And that board had approved those changes to the code, I think on the 10th of April, 2024. So it was about 2 months back. These changes have now become a part of the code. So what I'm trying to explain is that it took almost a period of 4 years from start to end to look at what should be the changes to the code. So the project objective was that we were asked to develop a principle-based ethical framework to guide judgments and the decisions when a professional accountant in public practice provide tax planning services, or a professional accountant in business, I would use the word service, perform tax planning activities for the employer. So this was the project objective. The applicability, again, please, since these slides are from ISBA, they will use the word PAIB, but in the subsequent slides, I think I've used the word only public practice only. I have not dealt with the provisions on PAIB because the provisions are the same. So about its applicability, it applies to all entities. So if you're an employee of a partnership firm or a company or an individual promoter or anybody, and if you're providing tax planning services, it applies to all entities irrespective of what your employer is. When in practice, who does the code apply to? The Section 380 applies to every client. It can be an individual, it can be any entity, public, private sector, anything. It applies to all entities. And the code, we also recommend that the other tax advisors should be encouraged to apply these standards, because it should not be that the code is applicable to only a chartered accountant, a professional accountant. It should apply to everyone. I mean, those services can be provided today by others as well. If you see on the left side of the slide, the ethical considerations apply to the entire set of services. But if you look at the left side, which is green, and the right side, which is red, I think the difficulty is less in those areas, because if your client is doing something clearly legal, you don't have a problem, right? Because your client is doing everything ethically. Everything is correctly. Whatever you advise, the client is doing it. And the presumption is you are also doing it ethically and your client is also doing it ethically. If it is on the right side, if you're doing anything which is illegal, then obviously the court doesn't have to say anything. I mean, whatever is illegal can't be a part of the code, right? You can't be doing something which is clearly illegal. The code, you don't require a code of ethics to say, well, you are prohibited. You're, so it is as good as saying, well, let's not talk about it, because you can't be associated with anything which is clearly illegal. The challenge comes when there is, for you to decide what should be done. And we thought, let's put that word in a gray zone, which is neither clearly legal, where there'll be hopefully no challenge. Clearly illegal, again, where there'll be no challenge because you can't be associated with anything which is clearly illegal. The challenge will come only when you are in a gray zone, when there is uncertainty, what to do, what not to do. And having said that, we said the ethical principles apply to everything. The challenge is more in the gray zone. These provisions do not apply to if you are doing tax compliance. Because we said, let's not keep, let's not overburden. Let's start with tax planning, which is not a daily job. You may be doing a tax compliance or a return preparation every day, right? But you may not be doing tax planning every day. And that is why we today looked at tax planning. What may happen in the next 2, 4, 10 years, I don't know. But this was not there 5 years back in the code. It is there today. And obviously, these considerations, we are not looking at tax evasion at all. That is a big no to start with. Now, I've used the word professional accountant in public practice, which is Section 380. So if you look at the entire Section 380, it would have about these 14 subsections, broadly speaking. And I will touch upon some of them in the subsequent slides. For example, description of tax planning, what is related services, what is my role, compliance with laws and regulations. Very interestingly, there is a section on responsibilities of management and those charged with governance. I think let me just address on this here when I speak about this thing, this entire changes. Someone wrote to us, and I think someone came to us saying in the ISBA board, why there is a section on responsibility of management? Because the code doesn't apply to them. The part on professional accountants and public practice. So if I'm a practicing CA, and if this section is applicable to me, which is Section 380, then why there is a section on responsibilities of the management? And my answer was, look, every time if anything goes wrong, the first question is, who's the chartered accountant who is advising? I said, nobody looks at, generally, who's the management? What were they doing? I said, let's recognize and put it in the code that there is a responsibility of the management also. It is not that the management can go scot-free. Now, maybe my institute may not be able to make this code applicable to those people who are responsible in the management. But let the government of India look at it. If they want to make changes to their laws and regulations, maybe MCA may want to have a look at it. Maybe the CBDT may want to have a look at it. Our idea was to recognize the fact that it is not a CA alone. Hopefully, he's not at fault, but he is the only one if there is something wrong. There's the responsibility of the management also. Maybe the management was more wrong and not the professional accountant. So this was again one area of the new change which was debated as to should it be there or not. And then there is other things on what is credible basis, stand back test, and I'll talk about this also in a little more detail. Navigating the gray zone, disagreement with the client, etc., etc. So this code, the new section 380, is divided into broadly these 14 segments, and then each segment would have the requirements and application material to explain what is there. And I'll touch upon some of them very briefly. Let me put a caveat here. I'm not discussing the entire changes, because entire changes, if you want me to address, probably I would need a day and you may not have a day. I may still have a day. But I would urge members who are listening, people, if they're council members besides Anuj Bhai also, and the ESB also, to look at these new changes to the code. And let me also point out that ICAI has not adapted this as yet, or has not made any changes, or why made any changes, has not debated in the Ethical Standards Board as to what should be the thought process, because I think it has to be guided by the council as to what should be done, as to what ISBA has done. Anuji has made a group, and he mentioned at the beginning, to look at what changes should be made to the code. So I'm sure they would be looking at what is to be done to this also as they go along. But I thought I'll address it at the beginning. These changes are more ISBA approved. They are not in our ICAI Code of Ethics as on date. And what happens in the coming months or years, I don't know. It will depend on how the council decides. And in their wisdom, they will decide that. Now let's go to the next slide. And I think I basically have about 8 to 10 slides only on this. So I don't have too many slides. I've just kept it very simple. If you look at the heading of this slide, it says description of tax planning. We tried defining tax planning initially. Should we define tax planning? We had a number of definitions. There's an OECD definition. There's a definition in UK HMRC. There is a definition in OECD. So we looked at a number of definitions and we said, no, let's not go into that. Then we looked at what is aggressive tax planning. Because initially the debate was that there's an aggressive tax planning done by some of the members, some of the professional accountants. And then we concluded by saying what may be aggressive for Sanjeev Chaudhary may not be aggressive for Anuj Bhai. What may be aggressive for Anuj Bhai may not be aggressive for, say, Mukulji. What should we do? So we said, let's not define tax planning. Let's give a description. And what is the description? Tax planning services are advisory services. They're advisory. They're not compliance. Designed to assist a client, whether an individual or an entity, in planning or structuring the client affairs in a tax-efficient manner. Again, please, I can go into each word here. It is assisting a client. I am not the management. I'm assisting a client in planning or structuring the affairs in a tax-efficient manner. So you see, here we are talking about tax planning. Ultimate goal of tax planning, or one of the goals, is to bring tax efficiency. We debated, should we use the word tax minimization? Should we use the word tax optimization? What is optimization? Tax morality, tax... No, so we said we are not addressing tax morality here. We are not going into what is right tax here. We are talking about tax efficiencies. Ultimately, you'll have 10 reasons to do what you want to do. And tax can be one of those reasons. And obviously, you may not look at as a client as to, my taxes are also going up. You will also see, are their taxes looked at also, and affairs are structured in such a manner that I'm able to achieve tax efficiency also. It is possible that your commercial considerations may overtake tax. You say, to hell with it, I will not look at tax. I need to structure my operations here to do it. So we actually looked at the word description and we have not defined the word tax planning, and then we have given the examples. And I just put 2 examples here. Advising a client on structuring the client's tax affairs to achieve their investment goals, or you may be doing some tax planning for your employees or for the, say, estate planning goals. There can be many reasons to do that, right? You may be advising the client on structuring of transfer pricing arrangements. The client is in 10 jurisdictions. There are different laws. How do you structure the operations? And you would look at the tax-related transfer pricing guidelines. You see, on this, the debate was, is every transfer pricing work tax planning? It is possible you may be doing just a tax compliance by filing a tax return, looking at the transfer pricing provisions. Compliance is not a part of tax planning, pure compliance. But if it is tax structuring, where you are looking at the transfer pricing arrangements, you are looking at the tax-related transfer pricing guidelines, is that tax planning or not? The answer is yes, absolutely. I'll give you one more example. If you're advising a client, say an individual business owner, on structuring their ownership structure and income from the businesses to minimize their overall taxes. And in the code, this is para 380.5A2, we've used the word to minimize their overall taxes. What is wrong in using the word? All of us know it. So I think the point at times was debated is that should we attack the issue as it is, or should we, circle around and not use the word which may be a difficult word to use? Tax minimization. People go into tax planning looking at, is it possible to minimize taxes? A lot of companies look at what is their effective tax rate today. Why do they look at the effective tax rate? Because they want to pay their fair share of taxes. But what is the effective rate? If my rate is 25%, is my effective tax rate 30% or 20%? Am I overpaying my taxes? You must pay your due share of taxes. Now, having said all that, we are not addressing tax morality. Let me repeat again. We are addressing only tax planning, and these are examples of tax planning. And there are other examples given in the new provisions. So I'm not going into each and every example there. I'm very briefly touching on that we did not define the word tax planning. We gave a description and then gave examples. And examples are such as, we've given 7, 8, 9 examples. There can be 100 examples. So we've just explained what is meant by tax planning. What is related services? Now, you may be engaged to provide a related service which is based on or linked to a transfer pricing tax planning arrangement, which is developed by the client or a third-party provider. So if your services are linked to or based on a tax planning arrangement, we as a board felt that even those should be covered. And if there is a tax planning and tax compliant in one letter of engagement, then compliance part, these provisions will not apply. They will apply to only the underlying tax planning services. The code clarifies this also in para 380.6A1. Let me repeat. It applies to related services, but it doesn't apply to all related services. So look at the examples given. If you are asked to provide services to a client in resolving a dispute with the tax authorities on a tax planning arrangement, now, should you take up an issue where you believe yourself that it is not correct? There were 2 views on this, but the majority felt, and I think the board unanimous approval in the end was, that if something is ethically not correct, it is not correct. I mean, if I have to put it in very simple words, there is no right way of doing a wrong thing. I mean, is there a right way of doing a wrong thing? There may be less or more. The degree of what you do wrong is less or more, but wrong is a wrong, right? Something which is ethically incorrect is ethically incorrect. You can't do it. So the board has unanimously approved, so is the PIOB, which is a part of the code now, that you can't be assisting a client in resolving a dispute with the tax authorities on a tax planning arrangement. Can you implement a tax planning arrangement where the advice has been given by another professional accountant? You can do the implementation, but these provisions will apply totally because what you are doing is a related service. Another example is, can you advise a client on an acquisition where the valuation depends on the tax planning arrangement established by the target? Again, there's a conflict, right? There is an issue there. There is a related service. First, you advise on the valuation, and then you advise on a tax planning. So I think you need to make sure that the related service is either associated with the tax planning or it is not. If it is a compliance service which is not associated, then you're out of it. But otherwise, the provisions of tax planning and related services will apply. Now, we initially used the word aggressive tax planning. What is aggressive is a very subjective term. What should we do? We debated a lot, and then we came across and decided on the word that we should look at what is a credible basis. And the code in para 380.12, again, it is a requirement. And requirement I'm repeating, again, not going into explaining it, that it is a requirement that a member has to follow, a member shall follow. And I use the word shall here. It says a professional accountant shall recommend or otherwise. That means, sorry, you can't do it. Shall recommend or otherwise advise on our tax planning arrangement to a client only if the professional accountant has determined that there is a credible basis in laws and regulations for the tax planning arrangement. You have to use your professional judgment. What will you consider? Obviously, a professional judgment. That is why the client has come to you. See, the client comes to all of us because they believe that we have the competence. We will use our experience. Otherwise, they can do it on their own, right? Why should they engage in Anuj Bhai? Well, they'll come to him because they know that Anuj Bhai brings the experience on the table to advise the client. He will use his professional judgment. So the two key considerations are that you will exercise your professional judgment and your determination will be jurisdiction specific. So if you're looking at India only, you look at Indian tax laws, right? But if the client comes to you and has issues or looking at a tax planning in 2 jurisdictions, 3, 4, 5 jurisdictions, then your determination has to be jurisdiction specific also, right? Either you are supposed to have the competence yourself or you will have the connect or, let me use the word network very loosely, but professional references, connect with the right people to give the right advice to the client. And that is where you will have jurisdictional specific, hopefully experts supporting you. And hopefully not the Google supporting you to give your tax advice or tax planning advice. Again, on this, there are examples as to what will you look at when you're establishing a credible basis. You see, the idea of this code is to give guidance, right? The idea as a code is not to sit in judgment as to what you're supposed to do. So para 380.12, when they talk about establishing a credible basis, gives examples of actions that a professional accountant will take. They say you will review the relevant facts and circumstances, including the economic purpose and the substance of the arrangement. You will go into the substance of the arrangement. What is the substance? What are the laws applicable? You will look at the assumptions and the reasonableness thereof. You will review the relevant tax legislation. And this list goes on and on. The court says you have to establish a credible basis. And also, please note what is not prohibited. What if you reach a stage where the basis is not credible, can you disengage with the client totally immediately, or what do? You can engage with the client if there is no credible basis to explain the rationale what you are doing and what all can be done to make it credible. You can't just close the door to say, well, boss, what you're saying is incorrect, not correct. It's not credible. Thank you very much. There's a discussion, there's a back and forth. You may go into assumptions with the client. You may go into further discussions to understand what he wants, how it is to ensure that the basis is credible. What if the client comes to you at a later point when he is facing an issue with a tax dispute? Should you help the client or not? You can, provided it was lacking a credible basis and you're helping him remediate it or rectify it. Not fighting a wrong thing, right? So what is not prohibited is, somewhere I think some people felt that moment you reach that the basis is not credible, then we can't do anything. No, the court says what is not prohibited also in case you reach that situation. It is possible also that, you reach a situation that the basis is credible and suddenly there is a change in the law or change in some court judgment coming from the highest court, say in India, from Supreme Court saying, well, this provision has to be read like this. Can you reassess the situation? Subject to what is given in your scope of work or your client engagement, you can reassess. Why not? If something is not correct, and say during the course of the engagement, maybe during the course of implementation, something changes and comes to your knowledge that whatever you're doing is incorrect, you may have to rework, stop, and do something else. Once you know that the basis is not credible, you can't then proceed forward with it, right? Whatever you may have done. So you may have said, yes, please proceed. Then there is a change in the law, whether because of the change in law or because of a court interpretation, which you believe that fine, it is the new law today, and it is applicable to what you're doing. So should you go ahead with it? No, the court says there's a requirement, there is an obligation on you. You shall reassess the situation. I think I'll go a little fast. I have 10 more minutes as per the watch. Considering overall tax planning recommendation or advice, some people will use the word stand back test. It is basically more complementary to what we've just now looked at, credible basis. See, I remember when we were discussing and debating this point 20 years back, not many people were looking at the stand back test as my own assumption. I may be right or wrong, I don't know. But a lot of us would say, if it is technically correct, let's do it, yeah. I think the expectations have changed over a period of time. The people's tolerance to something which is not ethical is going down and down and down and down. And that is why we as professionals have to do and look at these things much more closely in whatever we do. I'm not even for a moment suggesting that some people may be doing things which are incorrect. No. Unethical? No. I think the basic premise and the reputation of this profession is that we do things ethically, correctly, right? Now, some people use the word stand back test. Some people use the word smell test. I've lately heard the word, the newspaper test. How would you react if tomorrow the advice which you have given to a client comes out in the newspaper to say, well, this is the advice given by so-and-so, and this advice is unethical or incorrect? How will you react to it? What is your reputational, commercial, or wider economic consequences when you give a tax planning advice to a client? So the court again puts a requirement to say that you will exercise the professional judgment and consider reputational, commercial, and wider economic consequences that could arise from the way the stakeholders might view the arrangement. Not only a client, maybe the public, maybe somebody else, maybe the government of India. So anybody can look at it, and this is where the stand back test comes in. it actually complements the credible basis principle. And again, I'm repeating, I've said this before, it is not about tax morality, that morally you're supposed to pay right taxes, or fairness of tax, or tax justice. No, we are just looking at tax planning and the ethical principles. Someone raised a question during our board discussions. You're casting a bigger responsibility on a professional accountant, and he'll have to do more work. The code very clearly says it is based on your general understanding of the current economic, environmental, and impact on the jurisdiction's tax base. So you see, when people come to us, they come to us for us being experts. They don't come to us that we need to look at and do more research while providing tax planning. I think my experience of doing something will hold me in good stead to explain these reputational, commercial, and wider economic consequences. I mean, a lot of people would do, in fact, a lot of people actually should not do and would not do something because of which their reputation is gone tomorrow. People say it takes years and years to build reputation, and it takes just a few seconds to finish off your reputation. So if the client knows that something can bring him into a disrepute tomorrow, or there be wider economic consequences, the client may not like to do that. And you must explain. Again, the code says there is a requirement for you to tell the client, explain what is the basis of what you're saying. I mean, you just can't say that, well, I had a dream that, look, you may have this problem and you can't do this. No, that's not allowed. So you must explain. I think gray zone I briefly talked about already. It is the gray zone in between, which is basically because of the uncertainties that the proposed tax planning arrangement needs to be in compliance. The left and the right will never have a problem. The left is absolutely fine. The right is absolutely wrong. It is the gray zone which is more challenging, and there is again a guidance to this in the code. Now, another maybe 10 more minutes or 5 to 10 more minutes. We talked about the conceptual framework when I explained the building blocks of the code, which says that you have to identify threats, evaluate, and address the threats. I'll give you just one example of types of threats which is in this code, in this tax planning provisions. I don't know how many of us have followed the international news. You see, there's a entity in a foreign jurisdiction where, and I'm keeping the country out in the name of the consulting firm, also not giving it to you. It is there in the public domain, but I don't want to go there right now without the names. Their tax partners were advising the government of that country on what should be the tax policies, say on taxing a large corporation, or what should be the tax policy on, say, transfer pricing laws, etc. So they were advising on the tax policy to the government. Obviously, the information was confidential. You are advising the government on what should be the future tax policy. Using that same confidential information, they started advising their clients how to circumvent or how to plan their affairs or structure their affairs in a manner that you'll be able to come out of those proposed laws. Clearly unethical, right? It doesn't require any discussion. But some people did that. Those emails came to the notice of some authorities somewhere, and a long investigation took place from 2017 till I think early last year or mid last year. The chairman of that consulting firm in that country has resigned. Some partners have resigned. The country is looking at amending the laws in their country today. And all this happened because of some services being provided on the tax planning side and not by audit. As I think Anuj Bhai said in the beginning, does my code apply to only audit? Is it the problem audit only, or is it other services also? Now, here's an example where a non-audit function became a challenge for the practice. Now, that country actually is looking at now how to regulate the non-audit function, because they say audit is regulated now. It is the non-audit consulting part, if I use the word loosely, which created a problem, and they're looking at now changing the laws to make the laws applicable to the non-audit part much more than the audit. Very quickly, there is a disagreement with the client. What should you do? So you disagreement to your client as to what is the disagreement and the reasons thereof. So the para actually, para number 380.12 is a requirement. It says that if you as an accountant disagree with what your client is about to do or is likely to do or what the advice is, then you must inform the clients of your assessment as to why it is not credible. You must inform the client with the reasons. You must again explain, and I'm using the word, actually it says you shall, explain the potential consequences to the client if they still wants to go ahead with the proposed tax planning on which the advice was being sought. And also advise the client not to follow that tax planning arrangement, not to do it. So very clearly, inform what is not correct with reasons, explain the consequences, and tell the client not to do it. Now, what if that in spite of all your advice to the client still wants to proceed with it? What should you do? The code again gives guidance. The code actually can give you only guidance, right? The code can't hold your hand to say, do it. If you will not do it, I'm sure the institute or some other regulator will come after your life. What does the code say? It says advise the client. So you as a professional accountant, you must advise the client to communicate the difference of views to the appropriate level of management. So you may be talking to the CFO, or you may be talking to maybe the financial controller, or maybe a head of tax, etc. They say, please communicate the differences of views to the appropriate level of management, to those charged with governance, maybe to the board. It also says that consider communicating the details thereof to the external auditor. Communicate such differences and consider them. And also consider making full disclosure of the tax planning arrangement to the relevant tax authority. If you look at the last bullet, there is one which I kind of have spoken about it on the external auditor. Both the places, the code says that the professional accountant should advise the client. You see, there is a question came, what about confidentiality? Can I, as a professional accountant, go to the tax authorities and disclose it to them? So we looked at that. We said, okay, let's make the change to the draft which was there before us. The code now says that the professional accountant should advise the client to consider. Now, it is up to the client. In case he doesn't want to do it, then he will get into a problem. You have told the client, sorry, he can't do this. You must advise him in writing, preferably in writing, because tomorrow he can go back and say, well, you never advised me. To consider making full disclosure of the tax planning arrangement to the relevant tax authorities. Consider. If in that country it is to be done, do it. If it is not to be done, please consider about doing it. And then also you must consider whether there is a need for you to withdraw from the engagement. You must withdraw from the engagement. You cannot be associated with a client engagement where the client is doing something which is unethical. Now, the issue is big enough. It is again, the code says, for you to consider whether you have to move out of the total client relationship. Now, some people said, well, it is too much, how can you move away from the client also? So we said, look, we are telling you to consider. You decide whether the issue is big enough. You see, there are a lot of people who resign from the client, right? A lot of people who become the auditors don't want to sign the accounts. They walk away. Similarly is tax planning. You should consider whether you need to withdraw from the engagement or withdraw from the total client relationship because something is so unethical that you can't be associating your name and your reputation with a client who's compromising on his reputation, who is doing things which are unethical. So the code actually gives you enough and more guidance. Very quickly, I think I'll try and finish it in the next 5 minutes, Ashish. We're at 4:30. What if it is a tax planning product which is developed by a third party? So we looked at two scenarios where a client engages a chartered accountant or professional accountant to advise on a tax planning product. Advise. So if the client comes to you with a product of a third party and say, well, advise me on this, then you must do two things. One is you must inform the client if you have any relationship with that third party and comply with the provisions of this code as if it is a tax planning advice you are giving. In a different scenario where you feel as an accountant that, look, it is not your cup of tea, or you don't have the time or the competence, or you don't want to do something, whatever be the reason, you're not doing the job and you're referring the client to a third party service provider for the tax planning services, do that. But you must inform the client of your relationship with the third party. And then the code provisions will not apply to you for those tax planning advice. It may apply to that third party, but it will not apply to you. That's what, in a very summary way, other matters. On multi-jurisdictional, I'll just touch upon one thing. What if the client is obtaining a tax benefit from accounting the same transaction in more than one jurisdiction? In tax world, we use the word double dip or triple dip. Double dip meaning in one country, you are getting a tax deduction for a expenditure, and the other country, there is no taxability of the same thing. So you are getting a benefit in two countries of the same transaction. You see, if there's an expense somewhere, it should be an income somewhere, broadly speaking. But if that is happening, it may not be unlawful. But in public interest, the code says that you as a professional accountant must consider advising the client to disclose the matters to the relevant tax authorities. And what should be the factors to be considered? The significance of tax benefits, the stakeholders' perception, if the facts become known at a later point of time, and whatever are the globally or nationally accepted principles in this regard. And the last slide is on the documentation. On this also, there was a lot of debate. Should the documentation be mandatory? Should there be a requirement, or we should be encouraged? At this point of time, the code says you are encouraged to keep the documentation, and you must keep record of, again, as an example, what all? The purpose, circumstances, and the substance of the tax planning arrangement, identity of the beneficiaries, nature of uncertainties, what was your analysis, what are your results of discussion. Please remember, you see, if an issue comes up 2 years later, 5 years later, you may not remember what was discussed at that point of time. You would not remember your basis, your reasoning. Your documentation should be contemporaneous. As you're advising the client, keep this documentation. Because tomorrow, if God forbid anything goes wrong, this documentation will come and support you. And last is, since from when it becomes applicable, the standard actually becomes effective for the activities or services which begin when you start advising the client after 30th June 2025. So ISPA generally gives 1 year's time broadly for something to become applicable. And the transitional provisions say that if you're advising the client on something which goes beyond 30th June, as long as you started earlier and it is going beyond 30th June, then the earlier provisions will apply and the new code will not apply. But we always recommend an earlier, if you want to do an earlier implementation, you can do it. Effective implementation will be the responsibility of all the national standard setters, professional accounting organizations like RICAI, firms, individuals, regulatory bodies, etc., etc. So I stop here. I've just rushed a few slides in the end, but I thought I'll try and complete it in time given instead of going beyond the time. So I stop here, Ashish, and hand you back again to take the discussions forward.
Thank you, sir. Thank you.
Thank you, sir, for the wonderful session. Now I would request CA Nitin Vashne, sir, for the questions. Nitin sir, please ask the question to sir.
Yeah. Thank you, sir, for this wonderful session. And our viewers have asked some questions from you regarding this session. The first question is, can GST filing work be done while doing statutory audit of the same client?
So this question actually is not relevant to what we have discussed today. But I think Ashish can correct me. GST compliance services can be done with the statutory audit. There is no restriction on GST compliance services. Am I right, Ashish?
Yes, sir. Yes, sir. You are correct.
Yeah. So
It can be
GST
done.
services can be done even if you're a statutory auditor. I think नितिन जी प्रॉब्लम पता है कहाँ आती है?
Yeah.
दो चीजों का प्रिंसिपल है, बड़ा ब्रॉड प्रिंसिपल. अगर आप किसी क्लाइंट, जो आपका क्लाइंट अगर जिसका आप ऑडिट नहीं कर रहे, आप उसके लिए कोई भी नॉन ऑडिट सर्विसेज कर सकते हैं. देयर इज नो speaking. In fact, I may also add, I'm just going away, Ashish, from the topic of discussion with due approval from and permission from your side. हमने जब ये 2019 का कोड अप्रूव किया था नितिन जी, हमने उसमें ये भी किया था कि अगर आपका एक क्लाइंट ऑडिट क्लाइंट नहीं है, आप उसके लिए क्या कंटिजेंट फी भी कर सकते हैं. जैसे कई लोग हमें कहते थे कि यार मैं अगर एक क्लाइंट के लिए काम करूं जिसकी फीस, इसका मान लो मैं वैसे एक बात कर रहा हूँ कि उसका मैं 1 करोड़ का टैक्स का रिफंड लेके आता हूँ, क्या मेरी फीस डिपेंड कर सकती है ऑन द सक्सेस ऑफ डूइंग समथिंग? तो हमने उस कोड में चेंज किया कि अगर आपका वो क्लाइंट ऑडिट क्लाइंट नहीं है और अगर आपका क्लाइंट आपको फीस देने को तैयार है तो मुझे कोई फर्क नहीं पड़ता.
बिल्कुल.
प्रॉब्लम वहां आती है नितिन जी जहां पर मैं ऑडिट कर रहा हूँ, टेस्ट फंक्शन कर रहा हूँ, इंडिपेंडेंस इज इन द क्वेश्चन, तो फिर शायद ये हो सकता है कि जी आपकी ऑडिट फी तो कम थी, आपने यहां से फीस ले ली होगी.
जी.
तो इसलिए रिस्ट्रिक्शंस ऑडिट से बहुत ज्यादा आती हैं. देखिए, जो फीस की भी रिस्ट्रिक्शन है, एक फीस का प्रोविजन है जिसपे ये है कि अगर आपकी प्रोफेशनल इनकम 20 लाख से ज्यादा है तो आप एक क्लाइंट से, मतलब एक क्लाइंट, ग्रुप ऑफ क्लाइंट से आपकी जो डिपेंडेंस है वो 40% से ज्यादा नहीं होनी चाहिए, प्रोवाइडेड वहां पर आप ऑडिट कर रहे हैं. और अगर आप ऑडिट नहीं कर रहे तो आप जो मर्जी करिए. मतलब जहां तक प्रिंसिपल एथिकली करने का है, एथिकली करेक्ट करिए, बट फी डिपेंडेंस कैन बी ऑफ एनी अमाउंट.
Thank you, sir. Sir, next question, sir. Nitin sir.
Next question is, where we are considering ethical issues in providing tax planning, while other professionals are not affected by it. Is it not an ethical stand which is meant only for the chartered accountants, as the client will approach non-CA service providers?
Very right. So इसको नितिन जी, you can see it from two sides. नितिन जी, आप इसको दो तरीके से देख सकते हैं.
जी सर.
एक है कि देखिए मेरा प्रोफेशन है जहां पर देयर आर स्टैंडर्ड्स एप्लीकेबल, देयर आर रेगुलेटर्स सिटिंग टू मेक श्योर दैट वी डू थिंग्स करेक्टली. सेकंड इज टू से वेल, लुक एट समवन जहां का स्टैंडर्ड ही नहीं है. आई एम नॉट सेइंग दैट दे आर डूइंग थिंग्स अनएथिकली, बट व्हिच इज बेटर प्लेस जहां पर कोई स्टैंडर्ड्स हैं. आई ऑलवेज बिलीव देयर इज अ कॉस्ट ऑफ डूइंग इट. अगर आपका क्लाइंट ही अनएथिकल है वो तो फिर कहीं भी जा सकता है. फिर आपको तो सीए करने की भी जरूरत नहीं थी अगर आपने किसी क्लाइंट का काम करना है, राइट? यू सी why do our signatures have a value, नितिन जी? You know, this thing has been debated time and again. लोग हमारे पास क्यों आते हैं? Because of our attest function, because of the responsibility, because people trust us. अच्छा, अगर हम अपनी फीस ठीक से नहीं ले सकते तो मैं उसमें नहीं जा रहा. आई एम नॉट गोइंग इनटू द इशू ऑफ दैट सम पीपल से हमें फीस ठीक से नहीं आनी चाहिए. बिल्कुल आनी चाहिए. भी आप काम करते हैं, यू मस्ट चार्ज फीस फॉर व्हाट यू आर डूइंग, राइट? बट अगर आप अपनी फीस पे कॉम्प्रोमाइज कर रहे हैं और इफ आप कह रहे हैं कि नहीं जी मैं ये चीज क्यों मेरे पे लागू हो रही है. इसी एक और चीज बता दूं मैं आपको, जब हमने इंटरनल ऑडिट स्टैंडर्ड्स बनाए थे इंस्टीट्यूट में इंटरनल ऑडिट के लिए, तब भी ये चीज डिबेट हुई थी. आई थिंक इट वाज 2017 और 18. आई वाज चेयरिंग द इंटरनल ऑडिट स्टैंडर्ड्स बोर्ड. हम इंडिया में हमने कोई 3-4 जगह वर्कशॉप करी. हमने सबसे पूछा क्या होना चाहिए. सबने कहा स्टैंडर्ड्स होने चाहिए. Because we can then go and tell a client कि देखो हमारा is the institute which has internal audit standards also. Like we have today forensic standards also, right? So I think these standards have a certain positive impact instead of a negative impact. That is what I would like to believe.
Should I go for the next question?
Yeah, please. And Ashish, you can add wherever you want to, please. I'm just giving you my thoughts.
Yes, sir. Yes, it's fine, sir. It's very fine.
Can tax audit under Income Tax Act be done along with accounting for the same client simultaneously?
No, I don't think you can do accounting and audit together anytime.
Yes.
And there's no exception for a tax audit because it is again an audit. It is an attest function. You can't do a self-review. You can't do audit and tax both. Am I right? Accounting and audit both. Am I right, Ashish?
Yes, sir. Yes, sir. You're right, sir.
तो अपने बनाए हुए अकाउंट्स कैसे ऑडिट कर सकते हैं?
मतलब जिसने सवाल पूछा है सवाल बिल्कुल ठीक नहीं है, बट इन एनी केस नहीं कर सकते आप.
Are the provisions on tax advisory practice in future in the code mandatory and will have disciplinary implication?
So, रितिन जी, two things. जो मैंने आई थिंक शुरू में एक्सप्लेन किया था, जो हमारा वॉल्यूम 1 है वो है प्रिंसिपल बेस्ड. इट इज इशूड एज अ गाइडलाइन ऑफ द काउंसिल नंबर 1. अब हमारा एक्ट भी अमेंड हो चुका है टू से दैट जो भी गाइडलाइन काउंसिल की है अगर आप उसको फॉलो नहीं करोगे तो इट बी टेकन एज अ प्रोफेशनल मिसकंडक्ट. So yes, the answer is if you do not follow, then you can be open to a professional misconduct depending on which part, which schedule, etc. But yes, non-following the code of ethics can be a problem. Yes.
Next is while doing audit, if a non-compliance relating to tax is observed, then is the auditor required to address the same?
Is the auditor required to?
If a non-compliance relating to tax is observed, then is the auditor required to address the same?
So you see, so the question is not clear when there is a non-compliance to say of not paying the tax in time, right? जैसे TDS है आपने ठीक से जमा नहीं किया, TDS आपने ठीक से काटा नहीं है. There are separate provisions which deals with it. So I'm not going into the tax. There is a 40A1, 40A1A. There are penalty provisions. There are prosecution provisions. Tax audit की report में disclosures हैं on a lot of things where there is non-compliance. Or what is the compliance? For example, 43B. आपने बोनस पे करना था, कितना पेएबल है, कितना पे किया, 43B में कितना टैक्स पेएबल था, कितना टैक्स पे किया, वो सारा आ जाता है. उसके बेसिस पे आपकी रिटर्न बनती है. उसके बेसिस पे आपका सेल्फ असेसमेंट टैक्स पे होता है. अगर आपका सेल्फ असेसमेंट टैक्स ही गलत है तो आपकी रिटर्न ही गलत है. फॉर्चुनेटली नितिन जी अभी इंडिया में रिटर्न में साइन नहीं करता क्लाइंट की, तो जो रिटर्न है वो क्लाइंट की रिस्पॉन्सिबिलिटी है. इन सम कंट्रीज दी चार्टर्ड अकाउंटेंट, वहां वो CPA बोलते हैं, जो भी बोलते हैं, दे साइन द रिटर्न ऑल्सो, सो दे टेक रिस्पॉन्सिबिलिटी फॉर द रिटर्न ऑल्सो. तो जहां जहां आपकी रिस्पॉन्सिबिलिटी है एडवाइजरी, वहां एडवाइजरी है. जहां जहां कंप्लायंस की रिस्पॉन्सिबिलिटी क्लाइंट की है वो क्लाइंट की कंप्लायंस है, बट यू विल रिपोर्ट एंड दिस विल बिकम अ प्रॉब्लम बिकॉज ऑफ the additions either in summary assessment or assessment otherwise or return becoming defective, non-honest. There can be different consequences.
The next question is what is meant by material to financial statements are used with relation to the taxation services in code of ethics?
So material to financial statements is more an audit question, which is a professional judgment of a person. So materiality is defined in different standards of the institute. I think it is your own professional judgment which you will have to apply to see what is material. I'll give one example of it. अभी एक NFRA का order आया हुआ है जो which is on their on their website, where I think the profit or loss is about maybe 100 crores or something, and there are bad loans of about or frauds of about 10,000 crores of loans. Now, according to NFRA and that order, the accountant who certified the accounts or done a test function has not reviewed those, or his audit papers show a lack of proper, say, an appraisal. So I think those things are material. And I'm not again going into the audit, the key audit matters, the adverse opinion, the disclaimer, the qualifications, etc., because those are all different standards. And I do less of audit. I'm more a tax person. I'm more a regulatory and ethics person advising on these kind of principles much more, but not on a specific question of what would be material in a circumstance. If you look at the balance sheet, I think a lot of factors will go into what is material on a set of financials.
So, sir, last but not the least, while reviewing the tax calculation of the client, if there is some change in the calculation, whether auditor can recommend the same to the client.
Yes, certainly, because you see, I said you cannot prepare the tax calculation, but you will certainly review it. And if something comes from the review, you will get it changed, because the review doesn't stop at just reviewing it and not taking the further consequences and the further steps. You will take those steps. Absolutely right. You can. And you should.
Sir, we have received another questions which I'm reading, sir.
Mm-hmm.
First is, can non-audit fees exceeds audit fees?
Oh, again, I think there was a time, I don't remember, Ashish should know much more than me, Rashmi, on this. There was one-to-one correlance at that point of time.
Yes.
That your tax services fee cannot be more than the audit fee, which will not include the compliances part. There was exclusion. I don't know whether those guidelines still apply or there is a modification to that. In fact, both of you are the best people to address this question.
Yes, sir. So there's a council guideline which says that the fees for other services should not exceed the audit fees. But certain exemptions have been given. For example, if somebody is giving a certification which is required to be made by a statutory auditor, then it will not apply to him. And also, if he is going in a representation capacity, then also it will not apply. And also, certification work audit under any other statute.
Yeah.
So 3 exemptions are there. Otherwise, this is a rule which is in council guidelines that the fees for other services should not exceed the audit fees.
And it is applicable to all entities or only companies or pies, or what is it? It is applicable to all, right?
It's not applicable. It is applicable only to the companies, the government companies and the public sector undertakings, which are more than having turnover of more than 50 crores.
Oh, yes. So that's an important part. It's
Yes.
not applicable to all then. It is applicable to a certain set of entities.
Correct.
So that answers your question, yeah.
Yes, sir. So next question is, can practicing CA can charge minimum fees recommended by ICAI for professional assignment?
Subject to your client agreement, you can charge 10 times or 10% of it. That's only recommendatory. See, unfortunately, Rashmi, what is happening is, I heard a council member saying this, and I am slightly have a different view. We're talking about how to grow our practices today, right? And one of the council members said, well, we must know how to charge the client. Well, if you don't know how to charge the client, you should not be doing anything actually. You should be sitting at home, right? You see, if you don't know how to charge for your services, then वो ना कहते हैं हिंदी में कहते हैं अगर घोड़ा घास से दोस्ती करेगा तो खाएगा क्या? So we must know. In fact, the code goes on to say, in fact, that you must, for the audit, you should charge the audit fee. In fact, you see, there is a restrictions happening today to say, for public interest entities, you will not provide any non-audit services, right?
Yes.
Because some people believe that we charge less from the audit and get more money as a non-audit. What if tomorrow this law comes in to say, well, you will not be allowed to provide non-audit services? So take an example where you were charging audit fee of say 100 rupees or 10 lakhs or whatever it is. I'm just saying a number. And your non-audit was say 5 times. Because you were compensated for your audit fee from the non-audit. What if tomorrow this non-audit goes away? By the government, by the institute, by anybody. What will you do then? Will your audit fee become from 100 to 300 in the next year? the client may come back to say, well, your audit was only 100, na? The other was non-audit. So you must charge clearly for what services you are providing should be the clear goal always. You should not look at other services to compensate you for the audit. And that should be, the code very clearly says that also. I think internationally it is very clear that you cannot provide any non-audit services to public interest entities today. I think our institute is still in debate with MCA. What should be the management services, except those 7 services which are prohibited under the Companies Act to an audit client. The 8th is management services. And what is management services is still not clear to anybody, neither to the institute nor to the MCA, because there's a debate going on as to what should be the management services. But I think it should be clarified for the benefit of all the members as to what is covered and what is not covered there.
Thank you.
Thank you, sir. These were the questions. Now I would request C. Ravi Agrawal, sir, Secretary Mathura Branch, for the vote of thanks to Sanjeev, sir.
गुड इवनिंग ऑल मेंबर्स। जैसा कि आज जो वेबिनार हमारे मतलब ब्रांच के लिए आयोजित किए गए यूएससी के द्वारा बहुत ही फ्रूटफुल वेबिनार रही सभी मेंबर्स के लिए, और उसी रिगार्डिंग में मैं अपने ईएसबी के चेयरमैन सीए अनिल गोयल जी, जिन्होंने भी हमें ये अवसर प्रदान किया कि मतलब ब्रांच के लिए एक इथिकल इश्यूज पर एक वेबिनार का आयोजन किया गया, तो उनके लिए बहुत बहुत धन्यवाद। ईएसबी की पूरी टीम को धन्यवाद, क्योंकि उन्होंने पूरे प्रोग्राम को ऑर्गेनाइज किया, और सारे टेक्निकल सपोर्ट डिपार्टमेंट को धन्यवाद कि उन्होंने पूरी तरीके पूरे हमारे क्वेश्चन को अच्छे से आंसर किया और बहुत ही अच्छे से सही का मार्गदर्शन किया, और हमारे सभी मेंबर्स जो कि इस वेबिनार से जुड़े रहे उनका भी मैं बहुत बहुत धन्यवाद करता हूँ। थैंक यू।
You can sign off.
Yes, sir. Thank you so much, sir, for the session. Thank you, sir.
Thank you very much. Thank you, everyone. Thank you, Nitin ji. Thank you, Ravi.